summarizing, but we talked about this a couple of weeks ago. He basically came out and was like, we're not ready for higher rates right now. And so that took a lot of pressure off the system from a yen carry trade unwinding perspective, which obviously creates more. If you remove left tail risk in asset markets, the path of least resistance is higher in asset markets. Investors need to be aware of that. You need a real reason for asset markets to go down because populations grow over time, money supply grows over time. Those two things wind up in savings for both profits for the corporate sector, savings for the household sector, and savings wind up in asset markets. Wash, rinse, repeat. Population growth, money supply growth, profit growth, savings growth, asset market price growth. Wash, rinse, repeat. Population growth, money supply growth, profit growth, savings growth, asset price growth. That's how the system works. And sometimes that whole system gets accelerated. Sometimes the system contracts and we have problems in asset markets. We're not expecting that outcome over the medium term, at least not yet. Interest rates and bond market volatility are key countercyclical leading indicators of global liquidity. You know that because we've been telling you that for years. Japan's grid model is tepid growth and moderating inflation do not require a sense of urgency by the BOJ to normalize policy. So if you look at where Japanese growth is projected to be by our model by the end of 2Q of next year, 0.7%. It's currently at minus 0.9%. So that does represent a meaningful acceleration. But again, 0.7% is not going to, within 9 months' time, is not going to get the BOJ all hopped up to tighten policy at an accelerating rate. And we have moderating inflation projected over the medium term as well. Still, right around the BOJ's price target. But again, if inflation is not doing this and growth's not booming like it was back in late 2022, then you probably don't have a sense of urgency by the BOJ to normalize policy, which ultimately means you're taking away left tail risk from financial markets through the lens of carry trades unwinding. That keeps the carry trade very, very much active. Eventually, the carry trade will unwind, but right now, the market regime nowcasting process is telling you that it's not unwinding. In fact, it's probably building at this current moment. So take advantage of that. Of the world's 10 major central banks, and I'll end on this slide, very important slide. Of the world's 10 major central banks, the Bank of Canada, the People's Bank of China, the European Central Bank, the Swiss National Bank, the Bank of England, and the Federal Reserve are easing monetary policy. Only 2 of those 6 central banks that I just named have core CPI below 2% year over year. That's the Swiss National Bank and the People's Bank of China. The Bank of Canada, the ECB, the Bank of England, and the Fed are currently easing monetary policy with core CPI above 2%, 2.7% in the US, 2.7% in the Eurozone, 3.2% in the UK. Japan, pivoted from policy normalization to I'm too scared because the Nikkei might go down again to dovish forward guidance at 2.4%. The Swiss National Bank and people in China are the only ones easing because they should be easing. So investors need to be aware that this asymmetrically dovish reaction function is not just a US phenomenon. It's a global phenomenon because there's way too much sovereign debt globally and somebody's got to buy it. And these guys are trying to entice us to buy it because they don't have enough air cover to expand their balance sheets like they would in a recession or like they would in a significant downturn in asset markets. So now they just got to ease policy with inflation way too high. And then it's a tight line to dance because if you do too much easing with inflation high, then the bond yields are going to run away from you. So it's a real tightrope that these guys are doing. And quite frankly, golf clap for the world's major central banks because this is hard stuff. What is their option? I really do feel for these people. I think they want to produce good outcomes for society. I don't think they have a choice. What is their alternative? Allow the treasury market to collapse and global repo markets to collapse and global financial markets to collapse and millions of people to go unemployed. They saw what that happened in the global financial crisis. That was not good either. So what is the outcome? There's no easy solutions to too much public sector debt. There's no easy solutions. You either have inflation, financial repression, or monetary debasement or financial repression, or both. That's it. That's the only thing you can do, and you need to be aware of that as an investor. So we'll wrap up. Kiss and Dr. Mo will make your hashtag frog life better. We talked about this last week. We're all frogs being boiled alive in a pot of monetary debasement and financial repression. So the number go up over time. Number doesn't go up in a straight line. There will be cycles to risk manage. But again, if you're paying attention to KISS as a retail investor or Dr. Mo as an institutional investor, you will do a lot better job of selling here once the top has been confirmed and buying here once the bottom has been confirmed. Notice I didn't say you're going to sell the exact top or buy the exact bottom. Our research is not set up for that. The fools out there the fools being convinced by charlatans are the ones who think that you're going to sell the exact top and buy the exact bottom. Nobody knows what the exact top is or the exact bottom is ex ante. If they do, it's called luck. It's called luck. And it's okay to be lucky, but you need to understand that luck is not a repeatable process. KISS and Dr. Mo are repeatable processes for compounding returns and maximizing upside capture, and what I believe is going to be a continuation of the secular bull market as a function of the financial repression and monetary debasement we're likely to experience in this fourth turning. So wrap it up there. Terry Still presenting our Around the Horn for Saturday, October 19th, 2024. Hope everybody appreciated that. And we'll catch you back here next week. Have a wonderful weekend. Cheers.